We've got 14 minutes left in this trading day, and we're now in the closing bell market zone. So this is commercial-free coverage of all of the action going into the close.
CNBC's senior markets commentator Mike Santoli is here with us to break down the crucial moments of the trading day. And today we've got Barbara Doran from BD8 Capital Partners joining us too. Let's kick things off with the banks. Here's where we stand right now. JP Morgan leading the pack as it has done all day, up a healthy 3.3%. Goldman Sachs lagging the pack as it has all day, albeit in positive territory today. You can really see its intraday recovery during the course of the earnings call from that chart. Citigroup, Wells Fargo, both trading nicely higher. We spoke with the CFO of Wells Fargo, John Shrewsbury, earlier in the show. Here's what he had to say about the consumer.
The consumer is very strong. So our mortgage business produced about $58 billion worth of originations in the quarter. About 40% of that is refinancing as people are taking advantage of lower rates, which means 60% are people purchasing homes. So I think that means that they feel comfortable with their income, with their ability to service debt. And that's certainly borne out by the numbers over the last 10 years. CEO confidence, as reported, has been slipping. Businesses for some period of time have been deferring CapEx. There's, the GDP numbers suggest much lower business fixed investment. That's what's been missing in this in the late part of this recovery in terms of business spending. And I think people are taking a little bit of a risk-off approach.
Comments there about the consumer and also about the commercial outlook. I have to say, as we sit here, I'm a little surprised at the level with which these stocks rebounded during the day. Actually, Goldman Sachs specifically less surprised because there were 2 or 3 specifics that they addressed that put investors at ease. But for the others, it has just been a broad sort of sentiment idea. Yeah. And that's been worth about a 4 or 5% intraday swing, which is pretty pronounced, albeit they were cheap stocks coming in.
Yeah, they were cheap. They obviously, arguably, had low expectations around them. Also, I would point out the bond market. I mean, the 3-month to 10-year spread is now up to above 10 basis points. Not a big deal, but it was inverted not that long ago in the 10-year at 177 or so. So you had a tailwind of a strong market rally as well as, pretty steady numbers, I think, that people could latch onto for this trade.
In terms of the specifics on Goldman Sachs, is one thing we haven't discussed, which is that the share buyback for them was much lower relative to expectations compared to the other banks, and that did suppress the EPS number. The revenue number had been in line. On the call, they did suggest that part of the reason they did that was due to ongoing discussions with the government about the 1MDB scandal, which might be a bit of a hint to suggest they're getting closer to settling that. We didn't get confirmation on that. No one asked to follow up on the call, so it is something we'll definitely pick up with David Solomon, who'll join us exclusively on Thursday. But I think that would be worth a huge jump in the share price if and when they're able to settle it.
If that was removed as an overhang, sure.
Yeah. Bob, which of these banks do you think stands out for you in terms of valuation, or is the sector itself kind of too late cycle?
Well, we're looking at the earnings today. JP Morgan, obviously best in class, and the stock there, you can own, but it's not cheap relative to its peers. Wells Fargo is interesting because they obviously, the way the stock acted today, investors are assuming the worst is over. They're reporting all the bad stuff because of the new CEO coming in. So Wells Fargo, and we've talked about this before, we've seen the downside in this. So Wells Fargo is probably not a bad risk reward investment right here.
A lot of the analysts wondering, what's to come, and are they going to have to throw some of the guidance out the window with the new CEO when he gets in there and digs in and gets his hands dirty?
Exactly.
So we'll see what happens with Wells Fargo.